Well, the expanded scheme certainly reads as generous. From next month, the federal government will allow first home buyers across the country to pick up a home with a deposit as little as 5%. They'll serve as guarantor on the remaining 15%, allowing buyers to skip lender mortgage insurance. Under the expanded scheme, we'll also see income limits abolished and price caps hiked to over $1 million in some cities. Now, that could double the number of affordable properties available for those that are desperately trying to claw their way onto the property market ladder. However, this isn't going to magically change the ball game. Instead, it's been described by some as a quick one-off sugar hit. Now, analysis from financial comparison site CanStar has found that under this expanded scheme, single income earners will still be locked out of markets across the country. The case is a little bit different if you're in a couple or a dual income. You'll be able to scrape by in all cities except Sydney and Melbourne. Now, that's because the average income just isn't keeping pace with the way that property prices are inflating across the country. In Brisbane, the scheme will hike the price cap up to $1 million if you're purchasing a home. That's rising by $300,000. So a single person would need to earn $167,000 a year, while a couple would need to bring in $94,000 apiece on a loan size of $950,000. That would see repayments sitting at about $5,300 a month or $1,300 a week. In the harbour city of Sydney, the price cap has jumped from $900,000 to properties up to $1.5 million. So a single person would need to be bringing in $260,000 a year on a home of $1.425 million. Now, in Melbourne, the price cap has jumped from $800,000 to $950,000. So there, a single person would need to be bringing in $159,000 a year, while couples would need to bring in $91,000 each to qualify for a loan of $903,000. Repayments on a loan of that size would sit around $1,200 a week. So while the increase is certainly set to help some, others are worried that it's just going to inflate the property market and the prices that we're seeing across the country further. Now, there are a few things to look out for if you're considering taking up this scheme. One is definitely that stamp duty will vary, the relief that exists from state to state, so you'll need to do your own research into that. Another is that renting or becoming an investor isn't something that will qualify under this loan, and those that do attempt to take up this as an option to not live in the property after 12 months or anything like that will be slugged potentially with some heavy penalties. A worst case scenario could see the bank revoke the loan altogether. Now, all of the experts that the ABC has spoken to agree that for anyone considering taking up the expanded scheme, you need to be doing your own research, and all of this will come into effect next month on October 1st.